It's Brian Preston, the money guy.
This is from Mary. For pension holders, would you recommend a lump sum or monthly? I read a few books that made me confused. One book says get the lump sum. Another argued the opposite.
Wouldn't it be easy if they were all built on the same rules?
Yep.
This is the problem. Who asked this question?
This is Mary.
Mary, here's the thing. Every pension is designed completely different. And this is why I think you have to be careful listening to anybody that gives you definitive advice on pensions, is because here's what we've seen in our experience. There's a reason pension companies are trying to offer you lump sum buyouts and other things. A lot of times these things were designed with horrible assumptions, meaning too optimistic that they haven't met all their goals, and the companies are now trying to get out of these obligations by offering you a lump sum of money. You won't know that unless you actually do some analysis of what is the value of that annuitized stream. Because if they're telling you, hey, we have a pension for you that when you retire, and assuming age 65, we'll pay you this amount of money for the rest of your life, it might be a great deal,
That's right.
a really good deal, versus the lump sum they offer you instead of taking that cash flow. You won't know unless somebody does a full analysis on it. And that's what we try to do is there's a lot of ways to look at it. I think we've got a pretty good one that we've done for prospects. So I can't give you a definitive answer on it because your plan might be a really good one. Now, let me give you the other side. I'll be devil's advocate. We do see plans that, like, man, why in the world would you leave it in this pension that has this stodgy rate of return on it, whereas we could take this lump sum, this person is still a number of years from retirement. I think that they'll actually get the benefit that this cash flow that is projected on the annuity, essentially annuitizing the pension, plus their heirs will inherit what is left at the end. That's a win-win situation that we ought to take the lump sum. But as you can tell, I'm not really giving the answer because we have to do the analysis.
Yeah, what I think is so remarkable is because there's a lot of things that affect it. The company offering it, the way the plan is structured, where interest rates are currently, perhaps how old you are, how long you've worked there. All these different variables come into play. What I think is remarkable is those two examples you just gave. One where the lump sum made more sense and one where the annuitized piece made more sense. I've actually had clients where that answer was completely different inside of the same month. Right, different companies, but in the same month, same interest rate environment, same stuff going on. One, the annuity made sense. One, the lump sum made sense. So you're exactly right, Brian. It is not a one-size-fits-all. You got to do the numbers.
So what changed in 1 month to make it? It's just they offered more money to buy it out?
They were both. It was two. They were both in the same month. It's not that this is two different people.
Oh, okay.
Yeah, I'm saying two different people. One of them, the lump sum made sense. One of them, the annuitized benefit made sense.
Okay.
Although what's really interesting, since you brought that up, I'll go ahead and dive in. A lot of pensions are tied to segment rates or specific rates. Well, as interest rates drop, the lump sum benefit that you receive might increase. So we actually have some clients right now that we've actually been postponing electing their lump sum benefit because rates have been dropping and it's been increasing the benefit. So even there's analysis. Is it better to get the money and invest it, or is it better to wait, let the interest rate bump up the value until interest rates start moving in a different direction? So there's a lot of stuff that goes into the decision to take a pension, to not take a pension, or how to take a pension. This is probably one of those times that if you're facing that decision, maybe it's time to get a second opinion. Maybe it's time to talk to a professional that can help you do that.
Well, it's definitely a measure twice, cut once type thing, because it's one of those things, once you make the election, there's no getting the water back up the hill.
Right.
And look, I always feel weird about when I give an answer and the answer points you to the destination of hiring a financial advisor, because look, we have a conflict of interest.
Yeah.
We're financial advisors, but I still, that's the reality.
That's
I mean,
the reality.
it's there's a lot of variables. This is a big one-time big decision that will impact you for the rest of your life. Be careful. That's probably the best way of saying it. Be careful. It might make sense to have a co-pilot to work you through all those unique variables.